The military just launched Operation Epic Fury, and many traders are about to make a very expensive mistake. In today's market forecast, we'll cut through all the speculation and opinionated commentary and take a look at what the actual market response has been to previous military operations. I've also built a free indicator so you can continue your own analysis after this forecast. Links in the description. We're also staring down one of the longest squeezes the S&P 500 has seen in years, and the breakout is becoming more and more imminent. Plus, it's day 286 of bearish divergence. We'll check in on all of that, along with a couple stocks that you can consider trading. Let's get into it. Starting with our military operation indicator, you can add this to your chart. Go to the description and click the link. If you're using TradingView, it'll bring you right to a screen where you can add this indicator. And the way you read this is any yellow highlighted event is particularly relating to Iran. Red events are long-term events, and orange events are relatively short-term events. And any of these you can hover over, see exactly what it was, when it began, and when it ended. Now, what I want you to notice is none of these events changed the primary movement of the stock market. Sure, occasionally we've had a little bit of a pullback here back in 2024 when Iran attacked Israel. The S&P 500 traded down for a few days and then it bounced right back on up. But if you start doing some analysis on this, especially Fibonacci analysis, you'll see that this is a logical point of support. This might have happened regardless of whether the attack occurred or not. Here's another event, nothing. Didn't even register a blip on the radar. Here's another October 7th event when Iran attacked Israel. We did see a pullback, but the market continued on its way. And I think as you study each of these indications, what you're going to discover is it's not really interrupted the natural flow of the stock market. And if I was going to bias one direction or another, I would say historically, the market likes conflict short term. If this were to drag on and oil prices are going to skyrocket, we'll see that trickle down to some other securities. But generally speaking, I don't think this particular conflict that's going on in Iran, especially if it's short term, is going to create any kind of imminent doomsday scenario in the stock market. So disregard the crazy commentary you're hearing out there that this is going to be what drives the stock market down. Now, what might be a problem for the stock market is our squeeze and the divergence that we've been watching. So let's switch over to this Bollinger Band squeeze chart, and let me do a little bit of explaining so you can understand what's going on here. There's three indicators on the chart. The orange indicators are called Keltner channels. The blue indicator is called a Bollinger Band, and this is simply a squeeze indicator, which is referencing these two indications up top. The Bollinger Bands you've heard me talk about in the past, it's based on a 20-period moving average that you can't see. It's invisible through here, but then the upper and lower band are two standard deviations off from that 20. Super nerdy. That's why we put it on the screen so it's easier to read. Now, the orange bands are similar but different. These are Keltner channels, also based on a 20-period simple moving average, but instead of being a standard deviation off that 20 moving average, these are based on an average true range, and we've got periods of 1, 1.5, and 2. Now, this indication down here, the dots that you see represent the Bollinger Band relationship to this Keltner channel. Green dots means the Bollinger Band is not inside the Keltner channel. A black dot means it's inside the first. A red dot means it's inside the second. And an orange dot means it's inside the third, which we don't have an example on the screen here. Now, what I want to point out to you, and I'll add this indicator to your description as well, so you can review this on your chart. We also have a streak calculator down here. So on the S&P 500, we have been squeezing. The Bollinger Bands have been inside the Keltner channels now for 30 periods, 30 bars. That is a long time. You can see this streak was 13 bars, this was 6 bars, this was 5 bars. Let's actually increase that so we're not looking at all the streaks. Let's take it on up to 20. Only show me streaks of 20 or more. And you're going to notice there's not a whole lot of them. Here's one we had 27 bars back in 2023. You've got to come all the way back. Here's 23 bars, 24 bars. Keep coming on back, 21 bars. We're still not at 30, 20, 27, 28, 28. This one back in 2015. Some of y'all weren't even born back then. This was a 60 bar streak, 67 bar streak. Notice how long the Bollinger Bands were inside the Keltner channel. And this had a bearish breakout. Now, to be clear, this indication does not come with a directional bias, but what it does do is come with an intensity bias. And the longer this builds up pressure in there, the more this sucker is getting ready to go when it finally does go. Now, whether it goes down or up, I don't know. But this gives us an idea. If we come back to current events and go to our MACD indicator, we are now tracking day number 286 of bearish divergence. If you're new to this channel, bearish divergence is when you have a security making higher highs and MACD making lower highs. Which direction do you think bearish divergence tends to bias towards? Bearish. We also have been looking at our three-headed monster, and worth noting, after the attack in Iran, you've got government bonds, which spiked up. You've got the US dollar, which has been spiking and trending up to some extent, and crude oil, which has shot up. And when all three of those are heading up, typically that will drive the stock market down. So there's a lot of stacking signals that suggest some bearishness is imminent, not the least of which is seasonality. Go back to our previous market forecasts and look at my commentary on seasonality, specifically as it relates to a midterm presidential cycle. Typically in March, going into April, we see the market sell off until it continues back on up higher going into the election. So while I don't think this war in Iran is necessarily going to be catastrophic for the stock market, I do think we've been seeing a lot of warning signs that are suggesting some bearishness could be imminent for the S&P 500, which makes it a little bit difficult to find stocks to trade. Do we trade bearish? Do we trade bullish? Well, let me offer a couple ideas for you here. First of all, if you want to go and find a stock that I love to hate, it's Adobe. I don't know how you feel about it. Write it in the comments section, but I feel like Adobe is just on a crash course for insolvency. And with the recent release of Apple's Creative Suite, or whatever they're calling it, for $12 a month, that does basically everything Adobe does, I think the end is near. Now, that's just a lot of speculation because I don't particularly love the company and the $800 a year they charge their users to use their mediocre applications. But, you know, this thing's been trending down for a while, and I think there could be an opportunity for it to go even lower. So if you want to short the market or short a stock, Adobe would be one I take a close look at. Keep in mind, you've got earnings that are coming up March 12th, so that'll be here at the end of next week. Now, on the bullish side of things, and this is tricky because I think the market could pull back, we took a look at Raytheon Technology, ticker symbol RTX in PowerTrader. Unfortunately, we were a day late and a dollar short, I guess, as they say. We looked at this trade over the weekend. By the time it opened on Monday morning, it had gapped up. And yes, it's profitable if anybody got into that, but it's almost all the way up to where our target was. And that was based on Fibonacci analysis. All these orange lines and flags, that's called Fibonacci analysis. So I don't think this is a great opportunity, but there's another one, KTOS. And this is another defense stock that could benefit from some conflict going on in the world. And these guys had a volatile day, but kind of ended where it's still touchable. And I like the fact that we found support on this trend line that's coming on up through here. So you may want to take a look at this particular stock. It's ticker symbol KTOS. And my target on this is up around 106. The entry on it, we can update. This was an entry from PowerTrader as well, but you know, about where we closed on Monday or so. You might give this a minute if it begins to trade on down in the morning, but this is a stock that's still on my watch list. Last one, and then I'll let you guys go. Ticker symbol HL. We've been watching Hecla Mining for quite a while. Gold and silver both responded positively to the day of trading after the Iran attack, and I like this long lower shadow bouncing right up off from our support line. So go back and watch our previous market forecast. We've talked about Hecla mining for quite some time. We've just been walking this right on up the support line, and maybe this is the impetus it needs to finally break out and hit our target on up here at 33.41. If the indicators that I've provided are valuable to you, would you give us a like and maybe even a comment in the comment section? YouTube loves that. Let us know, let YouTube know if this is valuable to you. Also, if you want me to analyze any of your stocks, leave that in the comment section as well, and I'll be glad to take a look at it if time permits. Blessings and favor on your trades. Everything's going to be okay. I don't think the bottom is going to fall out of this, as all the fear mongers on the internet want you to believe. We might experience a pullback, but that's an opportunity to buy some stocks on sale.